All right, good morning, Trade Pros. Hope you guys had a fantastic week. This is George Trade Pro Academy. Lee, that is a nice ratio. I just read your comment, and I appreciate you for watching this pre-market update regularly. We'll be online as long as you guys are here. I'm committed to it. All right, hope you had an awesome weekend. Even though we have some, still stringent social distancing criteria, I hope you had a chance to do something special for your mom, or at least wish her a happy Mother's Day. And we're back to work this week. We got a lot of opportunity, a lot of movement. I think volatility is going to open up. Some news events already hitting the wires early this week. We're expecting some downside, a bit of a pullback. Okay, so let's talk about it. First and foremost, over the weekend, going into the Asian session on the open, sentiment was a little bit weaker already to kick off the week. But this morning at 7:40 a.m., you'll see a pretty sizable dump in the S&P 500 futures. All right, they dropped quite a bit. They broke below the 2,900 level again after trading as high as 2,947 on the ES futures, or about from high to low, we're about 57 or so points in a range or a movement rather to the downside, and we're currently trading near the overnight lows. So what caused this? 7:40, Chinese officials, some word leaked out that they're calling for new negotiations of the phase one trade deal. All right, saying that it's in fact in China's interest to terminate the current phase one deal. It is beneficial to us. That is a quote from their newspaper, Global Times. That's a bit of a shell shock to the market. If you guys remember pre-coronavirus, right now Corona is consuming our entire mind, energy, body, spirit. We're letting it. All right, there's a little bit of a hysteria around the topic. But if you remember what was important before this, it was the phase one deal. You guys remember it went on for over a year, negotiations back and forth. Finally, it was signed, the market rallied, and here we are now, China saying, look, we might not hold our end of the bargain on this deal. They said there's a lot of dissatisfaction. It's been growing inside the Chinese government. Advisors close said that Chinese officials are kind of rekindling the possibility of invalidating the deal. And, for the United States, this is where they need China. If you guys remember the deal, what it was, there was purchase quotas for agriculture, intellectual property, theft. They were going to work towards that. There were a lot of different tiers to this. The one that's the most important right now, the U.S., is that China buys a certain amount of goods. Why? Because they want to export. They want to export to that quota. Right? In hindsight, with the coronavirus coming out, that deal made sense for U.S. even more. That became the most important component. Right? The agricultural purchases. China's saying that they don't want to do that. Right? Obviously, they're slowing demand because of the coronavirus. They're saying it's not beneficial to us, and they are looking to potentially pull the plug on this deal. Here's the question that I have. All right, was this China's plan all along? Think about this. Was China's plan to sign this trade deal, phase one, and say, yeah, we're going to talk about phase two, bring it on, and then wait until, wait a couple months and say, hey, we're trying to get this stuff going. Wait another couple months. We're trying to get this stuff going. We just don't have the infrastructure. We'll get 100% agreement soon, and then the election comes up, and they hope to God that Trump doesn't win, because that's what it seems like the plan is. But then you think about this too with this phase one deal. Coronavirus wasn't part of the plan. It wasn't planned in the phase one, phase two, phase three deal. It just hit us like a black swan out of nowhere, out of left field. And hang on guys, I think my Bluetooth is on, which will interrupt the broadcast because this headset has both Bluetooth and the mic. And I turn off the Bluetooth. All right, so that's the question. The question is, how will coronavirus impact this phase one deal? And does China really want out? If they want out of the deal, they'll be out of it. They don't have to comply, but it's going to already increase tensions, and it's going to, deteriorate the relationship between the U.S. and China even further, which then the real question is, here's the thing. If China just drops out of the deal, it's not actually that big of a deal to the market. But what is causing a lot of concern and why people are dumping it right now early on is that what would be the retaliations from Donald Trump? And it's been hard to read Donald Trump for traders mostly, right? They don't really know what the next move is going to be. So what will be the next move? How severe would it be? All right, we're getting close to election. What will be the ramifications? How enforceable is it? If he does win a re-election for a second term, how much more pressure is going to put on China? All right, how will that impact inflation and the cost of goods? All right, is this a good time to restart manufacturing, considering that everyone's coronavirus? they're isolated, they're not working, and supply chains are disrupted. There's a lot of questions that are unanswered, and that's why the market's concerned. Unanswered questions equals uncertainty equals market concern. So I think on the open, we get a little bit of a pop. We're down quite a bit overnight, and then we continue lower. Downside for this week early on is a sentiment read. All right, moving on. Other markets overnight. Japan's down, Hong Kong's down, China was down, so is India. So even before this news flow or sentiment flow was to the downside. Okay, Japan was down 1.1, Hong Kong down 1.5. Europe at midday, most stocks were down almost a percentage point, and U.S. futures are now way below the previous day close and down about 1.5% leading into this open, right? And then let me just read this comment here. Yeah, Lee. Look, I think it's different when you have a government that doesn't change, right? They're able to communicate a 10, 20, 30-year plan more clearly than a government that changes every 4 years. There's a whole new re-election cycle like the U.S. However, just because there's a 4-year rotation of presidential elections, it doesn't mean there isn't a greater plan, all right? It's just hard for us to know it. So the question is, who creates the plan? Is it the president, or does the president execute the plan that's already been created? I ain't saying anything else. All right, I'll let you guys interpret that. Crude oil this morning, a lot of volatility, a lot of upside, and then a lot of downside. And right now we're back to the prior day close. Why did that happen? Saudi Aramco at 8 in the morning said that they've been directed to cut crude oil production in excess of the OPEC plus cuts. You guys will remember there was a production cut deal. So they're cutting an additional 1 million barrels per day. There's less supply. That bodes well for oil price. It should increase. But $1 million or 1 million barrels a day of crude oil production cut is nothing in a world that's got next to no demand. All right. So production cuts has been how OPEC has manipulated price for a long time. But now that you could control supply, but there's no demand, it doesn't matter how much you control supply. The market doesn't care as much. More importantly, where's the demand? Talk about that in a second. All right, so Saudi Arabia announced they're going to cut an additional 1 million barrels a day. That was initially bullish. It's giving back a lot of those gains. We traded those highs 25.58. Brent skyrocketed to 31.30 per barrel, which is out in the UK. All right, and following the news flow, you'll remember this weekend, Saudi Arabia directed MBS, Mohammed bin Salman, directed the government to spend or cut the budget significantly. That's Saudi Arabia's way of saying we're running out of money. Okay, because even though they're cutting production and selling oil, they're not selling it at a profit. Even Saudi Arabia loses money, sub $20 barrel, even $30 a barrel. So it's going to be interesting. Watch oil. I think we're not done with the news flow. I think some things will hit the news wire throughout the day. Keep a ear out on the squawk, all right? And there might be some more jawboning. I get a sense there will be. Gold's down slightly. Bitcoin down 0.5% to 8,800. This week is the Bitcoin halving. It's going to be basically where people who mine it are going to get paid half the reward suddenly at the flick of a switch. Last 2 times it's happened, there's been mixed results, but ultimately Bitcoin's led higher after this. So keep an eye out on it. I'm going to be watching it too. I don't really trade it. I just like watching it as a correlatory market. And I'm still trying to determine, is it a safe haven or is it a risk asset? And, you might have comments to put in that, but nobody really knows. I'll tell you, institutional money doesn't know yet. They're taking a shot at it. It's uncorrelated. It's out there, but they're not allocating a ton of money yet. They want to know, is it safe haven? Is it a risk asset? Is it completely uncorrelated? In which case, they'll see a lot of money flow into it. Today in the economic calendar, not much. Fed's Evans speaking at 12:31 p.m. Result of a $42 billion 3-year note auction. Tuesday, we pick up with CPI. That's the inflation reading at 8:30 in the morning. Wednesday, we have Jerome Powell speaking at 9 a.m., 30 minutes for the market open, right when we start our morning market update. I wish he would have asked. I really do. JP, come on, brother. Why would you speak during our morning market update? Have some respect for our community. Friday, we have retail sales out of the U.S. at 8:30, so we don't really have too many big reports like we did last week. And the most important one of this week is going to be Thursday morning at 8:30, another release of initial claims. Here's the situation. The market's climbed a lot, especially the 5 companies in the S&P leading the charge that are responsible for 20% of the market capitalization now. FAMG, Facebook, Apple, Amazon, Microsoft, Google. That's the new FANG. All right. We've climbed up a lot. And now we're pretty much pricing in the most optimistic coronavirus scenario. All right. People are getting back to work. I'm starting to get emails saying the government's lifted restrictions, easing requirements, blah, 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 blah. If there is no second wave, markets are going to continue to do well. If a second wave starts to develop, look out for tighter lockdown measures, and the market's going to sell off. So we're at a very big transition point. And we're also at the start of the summer where things tend to slow down a little bit in terms of volatility. Okay. Going to be interesting next couple weeks, and especially next couple months as we battle through Corona. Right now, sentiment for the week is bearish. You got to sell rallies until you're proven wrong. Where you're proven wrong, somewhere above the 30s, 33s, above the prior day close, you can start to get bullish. But for day trading purposes right now, a little pre-morning rip, and we sell it. I love you guys. Have a great day. Be careful. Manage your risk. Trade Pro. We got to open up the room. And yeah, appreciate you guys. Hope you had a great weekend. Back to business. Let's do this. YouTube, have yourself a great day. Peace out. I'll see you tomorrow. Take care. Ciao. Steven, we'll flip you on the mic in a second, and you could cover oil, some levels and opportunities for session. Then we'll give some levels for equities. So Trade Pro team, let's get started. We'll have a great day ahead of us.